The bond market going off the rails. I've been recently paying more and more attention to what's happening in the bond market, and from what I understand. 1. Banks can't buy bonds no more. They don't have the liquidity to issue loans, let alone buy bonds. 2. There is no plan in sight to slow down government spending since next year is election year. 3. Deficit at all-time high. 1.5 of new bonds will be issued this and the next quarter. 4. Foreign buyers are walking away. And Japan is expected to do so soon, biggest holder of U.S. bonds. 5. Inflation is not going down, so interest rates has to stay up, and so yields will need to do the same. 2. 6. Europe is in recession and no way to come out of it. Stagflation is the name of the game. 7. Fed needs to continue QT so that they're prepared for the next QE cycle, so more bonds to come. Seems like this is the most important undertone for the stock market. And with forward PE of the S&P 500 around 18x, it seems like the stock market can fall a lot if we compare to the 70s 80s where similar environment existed. I know that being bearish is good for content, but macro always drives the stock market indexes at least. So is it free money to short the S&P 500? Is it free money to short the S&P 500? Do not let bro cook. You lost me at banks can't buy debt no more. 1. Banks can't buy bonds no more. I'm having trouble getting past this wording. Till banks can't be banks no mo. No, the alphabet is not going back to the $86. Sorry if you missed, mate. Money supply go up, stock go up, barring the apocalypse. Bad take lol. What are you talking about, my guy? Just close your puts. Biggest holder of U.S. bonds, that would be U.S. residents. Not Japan. Timing is everything, blah blah blah, when everyone is expecting a recession, blah blah blah. This is not financial advice, blah blah blah. Yay, short it now. Lol. OP posts this after a huge bond and stock market rally this past week. Guys like this are ignoring two things. Inflation hurts savers, not people who borrow. The government will either cut spending like the 1930s or simply inflate the crap out the economy. Like they have for 50 years. We get stagflation these days, not deflation like 100 years ago. The second thing this guy doesn't get is shorting the market is the riskiest thing you can do. Guys like this don't understand that if the doom they say happens, money will be worthless and no one will have money to pay out his bet he won. It's really not comparable to the 70s. Not even close. 70s inflation was far worse with much weaker growth. They had proper stagflation. Bill Gross talked about PE way too high still. Bond markets are never wrong. Wrong bond markets mean global crisis. Yield curves do not invert in economic recoveries. Which means we are between recessions and not in recovery. Yield curves do not normalize without recession. Albeit perhaps mild. Everyone saying the market is going down guaranteed should post proof of their net short position on the S&P 500 or be muted for 24 hours. Forward PE of 18 is historically in line with current inflation rates. Why are you comparing it to the 70s and 80s when inflation was 5 times higher? This negative post about bonds is over a year late, friend, lol. Fed will lower rates and going to cut into yields the moment they see the economy going to shit. Evidently this week unemployment went up and soft job market report made the yield drop and bonds recovered a bit. Bonds aren't going to tank another 50. Maybe should have looked at end of 2021. Can we please have another several thousand spins on the inflation as when there's too much money? Oversimplification? I need more cereal box wisdom to base my investment decisions on. Thanks. Bears are the kind of people that pray for an economic crisis so their $500 puts print but then are shocked when they lose their job. Now is time to be bullish, not bearish. Europe in recession? I don't think this is the case at all. Maybe by some economic metric, but just walk down the streets, all the bars, restaurants, coffee shops, footy stadiums are all full. Money is still being spent even if people are feeling the pinch. Did you short TLT at the bottom? Preferred shares market as well. Some preferreds have been looking at paying out 15 or more in dividends. Have gone up 15-30 over the past week. Okay, just curious, where do you think the bottom is for SPY? I'm thinking 320,350. War will get us out of the inflation mess. One important part to your equation. Inflation will never go down because the government keeps countering everything the Fed does. It's not some magical surprise that our government has went ape shit on spending soon as JPOW started raising rates. There's only one way to introduce a digital currency. Bad news is you're the indicator to be buying. Snagged CRE March 35 puts today. Been so long. People don't know how to make money in a rising interest rate environment. This includes most bank managers. Our financial system isn't designed for it. They'll learn though. Got a feeling most are gonna learn the hard way. The Fed royally screwed up. When they saved the banks and kept interest rates low for 15 years, they assured that the economy would crash. The banks are sitting on billions of bonds that pay 1-2 and they can't sell them because then they have to book the losses, and anyways, who's going to buy a 2 bond when you can get 5 now? This is why the Fed is allowing the banks to use these worthless bonds as collateral for cash infusions. The next thing to watch for will be the cascade of banks failing just like earlier this year. I fear the market will crash even worse than the Great Depression. SPX literally popped 6 in 5 days with bonds rallying hard too and USD and VIX down massive. All macro indicators point to the start of a bull market. You don't want to be in front of a moving freight train. It is time to go all in on stocks. The end of the year rally is going to reach all-time high. Bottoms in. Inflation isn't going down because it wasn't inflation. It was and still is greed. How does someone get something wrong on all counts? Lol. Correct me if I am wrong, but biggest holders of US bonds are us citizens, businesses themselves. Japan is just the largest holder among foreigners, which still makes up very little of total. You know nothing. Go ahead with shorting SP and buy Russian companies' oil. It looks dumb to me. LMFAO banks can't buy bonds no more. Get back to the Wendy's dumpsters, you broke ass bear. Just buy and hold. Yeah bro, how did your puts do this week? 2 thoughts. I don't see a crash before the election is over. If there is one, it won't last long, or else others like the Chinese will take over. The past 2 weeks was a relief rally in long-dated bonds. The carnage will continue and the Ackman bottom will be broken. You lost me at banks can't buy bonds no more. Who told you macro always drives the stock market? There are only 2 things that drive the stock market: supply and demand. Think about it. If a majority of market participants agree with you, who is left to make bearish bets? Honor price above all else. You cannot take any of those 7 points to your broker to collect your profits. So yes, it is free money to short the SP 500. For me, since I'll gladly write whatever put contracts you would like to purchase.